Welcome back. Well, this market volatility causing many Americans to worry about the state of their 401k plans and IRAs. Joining me now is the Bahnsen Group CIO, founder, managing partner, and the author of Full-Time Work and the Meaning of Life, David Bahnsen. David, great to see you. Thank you so much for being here. What advice do you have for people who are handling their retirement plans in this current market activity?
Well, Maria, it's a difficult deal because the human nature of things is we're emotional, right? We tend to over-respond, sometimes with euphoria. We get too excited when things are going well. But, of course, we can get overly panicked when things are going poorly. I think it's very important for people to remember that as awful as these moments are, this one in particular is quite unique. This happens every 5 to 10 years. We remember the COVID collapse of 5 years ago. We, of course, remember the financial crisis, 9/11, the dot-com bust. These things have happened about every 5 to 10 years, and investors get an equity premium over time because of horrible times like this.
So, what do you do then? I know these things happen, but should you react or just say, look, this happened in the past, I'm not going to react, I'm not doing anything?
It all depends on how well the portfolio is constructed. If you have an asset allocation, if you have the right blend of stocks and bonds to begin with, I don't think people necessarily need to react. Now, I, again, am talking my own book here, but this is why I'm a dividend growth investor. If you're getting dividends and are reinvesting through down periods, you're going to benefit from it over time. If you have the S&P 500, you have to ride it out to some degree. You can always rebalance and be adding to the things that are down, but I don't believe you should be panicking out. That kind of reaction is how you turn a temporary drop into a permanent loss.
That's right. Great point. So, look, let's look from 30,000 feet for a second because we're all living longer, right? We're working more. We'll probably need our money longer later in our life. So what's the best plan for retirement and holding on to as much money as you can so your money outlives you?
Yeah, the number one thing in that scenario is that people have to be saving enough, which means that they probably have to make sure that they are consuming within their available resources. If we overspend and have too much debt, you're not saving enough, investing enough. But within your investment plan, I really believe that people need to have the right weighting to stocks, and they cannot rely on NVIDIA turning into a $10 trillion company, Apple going up 15, 20% every year. Investors got too top-heavy, Maria. They got too dependent on 5 or 6 big tech companies. Be diversified and be willing to own things like dividend-growing type companies that might underperform big tech every now and then, but then don't drop 30 or 40% whenever we have a bad market.
Yep, I agree. The best way to wealth creation over the long term is the stock market. That's it. Yeah. So don't get bent out of shape over all of these whiplash days. David, always a pleasure. Thanks.